Hi, welcome back. Mitch Argon here with Calendar Realty. I'm going to share with you some numbers on our recap for 2020 and a little bit about what we're seeing going forward in 2021 with regard to local real estate here in Northern Nevada. Stay tuned. Okay, welcome to January's update. Let's get started. Let's first take a look at 2020 in review. As you can see from the chart on your screen, the Reno market, all the way down through the territories, have had a pretty significant positive gain, ranging from as little as 6% in Dayton to as high as 30% in Lake Tahoe, and averaging probably low double digits, high single digits. It's important to note on this slide that this is for the entire year of 2020 compared to the entire year of 2019. So the median price continues to move up. As a matter of fact, you'll see in just a moment that the median price in Reno just set a new record high in December of 2020 at $500,000. So the recent high in median price could be quite a bit higher than the average through all of 2020. With regard to homes sold, you can see that there's a significant increase in homes sold across the markets. Keep in mind, this factors in our downtime that we had for homes closing probably April and May as a result of the shutdown from the onset of the coronavirus. The significant thing to note here on the homes sold column is at the bottom, and that is the 41% increase in Lake Tahoe. That is almost 100% attributed to the work from home phenomenon that we're seeing taking place as a result of the pandemic and changes in work and living behaviors. Sold price to list price, as you can see, the markets are very tight, hovering right around probably on average about 99%, which says that there's a 1% discount from the price being paid versus the posted price at the time a home goes under contract. That's an important metric if you're planning on listing a home or you're planning on buying a home, to get some sense for how much negotiating range is taking place in the current marketplace as of last year throughout 2020. Okay, so let's take a look and talk about December just last month compared to December of 2019. This is a more current view of the market than the full year review we just finished. As you can see, as I mentioned, Reno has hit a new median price high of $500,000. That's a 23% increase over December of 2019, but keep in mind, that's just 1 month. If you look to the far right column, you will see that the average over the last 6 months, in this case for Reno, is 16%. That will give you a truer sense for the rate of increase we're seeing in our markets, not just a single month. But as you can see, if you look over that last 6 months, there's pretty significant gains in our marketplace as we saw the last time. Okay, let's take a look at homes sold inventory and month supply of inventory at the current time. As you can see on the homes sold, continue to have a pretty healthy increase in the volume of homes sold from December 2020 over December 2019. Of note, of course, you can see Dayton, Fernley, and Tahoe having extraordinary increases, although the relative numbers are small. Tahoe, of course, you can see 12 is about where things have been. 20, we've been running close to 2 times the sales volume, so it's a 67% increase. When you take a look at inventory, this is the real story of the market. The other side of the coin, we see increased demand on the homes sold, and we see a dramatic decrease in supply with regards to inventory, which is making it very challenging, certainly for buyers in today's market. It goes without saying that those numbers are substantially lower than where they were in January of 2020 compared to current January 2021. The translation of these two things, which is basically supply and demand, results in our month's supply of inventory or homes on the shelf that we can sell before we deplete all of our inventory. And as you can see, with the exception of Tahoe, we are at a half a month or less in all of the markets, which is down substantially from January 2020. Tahoe, even though it's at 1.4 months, historically does run much higher. And you can see a year ago, it was at 5.1 months. So it's contracted from 5.1 to 1.4, primarily as a function of that increase in demand, which we talked about, which is a result of the work from home phenomenon. Okay, let's do a quick summary, talk about some 2021 factors that we are looking at here that could impact or likely will impact the real estate market here locally. Quick summary, of course, I mentioned the median price in Reno is a new high of 500,000. Our markets currently heavily favor sellers. It is very, very competitive for buyers. We're seeing many homes going at over the asking price. We're seeing additional terms coming into the market, like the waiving of appraisals, reduction of repair allowances, rent back provisions, and all kinds of things to sweeten offers so buyers can get their offers accepted. 2021 market forces, these are the things that we're seeing. Most of them will have a positive impact on the real estate market in terms of driving demand, although some of them not so much. I'll touch on these things. The work from home phenomenon, we stand to benefit in our market quite a bit from this. You see the impact it's had on the Tahoe market where it's the most pronounced, but it's affecting all of our region. Being, of course, so close to the Bay Area and Southern California, where there's a substantial population, people are choosing to opt, as you see on the right-hand side, to migrate to areas that are lower in cost and lower in density. Interest rates now hovering below 3% are forecasted to continue to stay low. I've read some reports that say they could be as high as 3.5% by the end of the year, but I think they will remain at historically low levels, even though they may not be as low as they are today through 2021, primarily as a function of reabsorbing the unemployment, which we'll talk about in a moment, and just the fragility, if you will, of our economy tends to keep those rates low, by fiscal policy. Mortgage forbearance, we've talked about this. We will start to see some potential impact from mortgage forbearance, I think, towards the latter part of 2021. Although I don't think it will be significant. It's not going to be a tsunami of foreclosures and short sales in our marketplace. The reason for that is, as you saw, the price has been rising rapidly. So if somebody has been in trouble because of unemployment or underemployment, unable to pay their mortgage, they can likely sell that home and come out with money in their hands, as opposed to having that home go through what we would typically call a distressed property sale, either a short sale or a foreclosure, which generally means there's somebody selling a home who has no equity or negative equity. Of course, we've got a new administration as of this week. I have not seen anything concrete, but I have read that there are proposals floating around for a couple of things that could be in the area of stimulus for housing, both for contractors and construction companies to build homes, single-family homes, multifamily projects, as well as for individuals. I have seen an individual proposal floated around with a $15,000 credit for first-time home buyers. That, of course, adds more fuel to the fire. So at this point, I think our bigger problem is getting more supply in the market versus creating more demand in the market. Although we could see some combination of those things as we go through 2021. Unemployment, I'm going to take a more regional look at unemployment. You can see on the chart below, which is updated as of November 2020. That's the most recent information from the state of Nevada. You can see that statewide, we're currently at 11.8%. That's down from 12.4% the month prior in October. However, it's up from November of 2019, pre-pandemic, at 3.4%. Regionally here in Northern Nevada, we're doing much better. You can see the comparisons down below between the Las Vegas market and Carson City or Reno, where we are currently running in the mid to high 5% range. So that's coming down, as you can see, on a month-by-month basis. However, it's still quite a bit up from where we were pre-pandemic. So there's work to be done and time, of course, to see these people who have been displaced get reemployed. One thing that's not on here that will, I think, be a significant factor for 2021, it's an oversight on my part, I've talked about it with my team, is the vaccination. With the vaccine now coming out, although slower than we had all hoped for here in this first month or two, that has the potential to reverse the reduction in listings that we've seen. And so we may see, as time goes on through 2021, people after they've been vaccinated feeling more confident putting homes on the market. Of course, that will increase supply. And what that hopefully will do is balance up a little bit better with the demand that we're seeing, so the markets are not quite so tight as we see now, which is quite challenging. Okay, so That wraps it up for our January 2021 update. Again, I'm Mitch Argon, broker with Calneva Realty. We have a team of great agents here who can help many of you in the marketplace. If you need help, need some guidance with either buying or selling real estate, please feel free to reach out with an email or respond here on the YouTube page that you're watching this from, and we will try and follow up with you as quickly as possible. Down below on your screen right now, there is a link to the Greater Reno-Tahoe Real Estate Report. Covers information going back for about 15 years at a summary level. And of course, it goes back about 2 years on a detailed level by market. So if you want to get more specific information on a specific market like Tahoe or Sparks or Fernley, for example, jump in there, click on that report. It's a PDF, and you can scroll down to look at the market reports that are more detailed. Thanks for watching. Hope this has been helpful. Until next time, make it a great day. Thank you.